I want to talk about how I use AI to trade crude oil futures, and I've made a video pretty much on every other product that I trade, and each and one of them is a bit different for the prompt, but this is a pretty good way to do some analysis, and it gives me a pretty good picture of what we can do. So let's go over basically exactly what I do. So this is the prompt, and I will link it in the description. I'm an option seller. I want to analyze crude oil futures to decide what kind of position I can open. And I would like to know the following information: what kind of upcoming events or reports that will 100% affect the price? Do not list any events that are not certain to affect the price? Is the price moving in an uptrend, downtrend, side trend? How volatility looks in terms of the past 3 months? And for point number 3, I give him the CVOL CME website to look at, so the commodity volatility index. Number 4 is what are the latest news from OPEC? So OPEC, basically they can control the price of oil, and they have a meeting every single month. So just, let's see what's going on, what analysts say, and so on and so forth. Then just please add any additional thoughts regarding geopolitical tensions and the possible effects on price. That's pretty much it. Make the report with the least amount of words and make sure this is to the point with a conclusion at the end. Now I use Grok and ChatGPT. Sometimes one's giving a better answer than the other, and sometimes they're both giving the same information. Generally, for some reason, Grok is more up to date, whereas OpenAI or ChatGPT, it's delayed by a day, so it doesn't know exactly what's going on. And obviously, we want the latest information. I'm just thinking right now. Let's take a look quickly at the crude oil price. So for now, the price went up pretty hard, 2.5%, and the news are pretty simple. I think Ukraine attacked some Russian refineries and cut Russia's crude processing output to a 3-year low. So at the same time, this has to be taken with a grain of salt, as Russia doesn't really export oil to the US. So he exports mainly to India and China. And it's also not the exact same crude oil that we have here in the US. So it's a bit different, but still affects the price nonetheless. But let's see if it's still thinking, which it is. And we'll give it maybe one more minute. There we go. So it's writing the answer right now. So for number 1, OPEC meeting is on September 7th. And see here. And number 2, this is a side trend, so price is moving sideways, which is pretty true for the most part. If you can see, price is somewhat sideways trending, even though it had a massive price increase here and here as well. But overall, it's kind of a massive side trend. This is what I would definitely say here as well. And then for the CVOL, it's see here, it's 40-45, so it's a decreasing trend. So let's look at CVOL and make sure that we are getting the good answer or the right answer. And what I usually do after the report, I just kind of go in, I look into everything myself to just kind of gauge exactly what's going on. But this is a pretty good starting point if you're trading a lot of underlyings and you're not sure exactly what to do. So CVOL is overall, obviously we have this spike over here, but I'm not going to count it towards my calculations. So yeah, CVOL is pretty low, it's decreasing, so it's not a good CVOL. And OPEC agreed to boost output by 547,000 barrels per day in September. Okay, so I'm guessing the meeting on September 7th will be regarding what's going to happen in October. So I would definitely want to wait for the meeting to occur before I enter any positions. And then number 5, Russian-Ukraine refinery attacked, and Israel Iran tensions add upside risk via supply disruptions. New sanctions on Iran and Iran may curb exports. So basically it tells us we have quite a lot of uncertainty and potential upside on crude oil because of, we just talked about Russia-Ukraine refinery attacks, and there's again tensions between Israel and Iran. So let's see here, the sideways trend and the falling volatility favor neutral positions like iron condor. Monitor OPEC Plus for supply hikes, geopolitics for volatility spikes. So that's pretty good. And, for myself, just point number 5 tells me, okay, if I'm going to do anything, I'm only going to sell puts currently and only after September 7th. So why am I going to sell puts? Because if you sell neutrally and whatever iron condor or a triangle, you want CL to be high, and you don't want anything uncertain to be happening like we have over here, point number 5. Right, so for myself, I will probably use this information. Volatility is low, so we can probably go ahead and sell a put and feel pretty good about ourselves, because the chances of crude oil crashing down are pretty low. Commodities, they crash upwards for the most part. So over here, what is likely to happen is the price might stay kind of range bound or crash upwards if something again crazy happens in the Middle East or in Ukraine again. But all of that I'll probably do only after October 7th, which is in just a few days. So let's see here, for example, what kind of puts position I can open and what it would look like on a graph. So we have 44 days to expiration. November is the expiring month for the future. So we definitely want to go pretty far out of the money, probably about strike 53. And for this strike, we can collect about $200 in credit. So not much, of course. And I'm not looking to collect or make a lot of money on this play. And 53 will probably be, let's see here, it will be right here. So as you can see, this is a pretty good cushion for how far we can get and still collect about $200 in credit. And personally, I will probably go 4 or 5 contracts for every $100,000. But ideally, again, I want to wait for October 7th. And if they will hike, if OPEC will hike the supply again, price might go down and we can get an even better fill price. But this is how you know using AI exactly what's going on basically with the fundamentals, because everything in trading is the fundamentals. If you don't know the fundamentals or if you don't care about them, then you will not have any success in trading long term. And I've been there, and you have to know what's going on with the product you're trading. Even if you're day trading, that doesn't matter what you're doing, you need to understand the market you're in right now. Where is the risk? Where is the bias? In this case, there's a lot of risk to the upside, a lot of uncertainty, and very little risk to the put side, because it's very unlikely for everything to just gonna come down and price will just crash down or go down pretty aggressively. So with all of that, selling puts is basically going to be the best thing to do after October 7th, most likely, or sorry, September 7th, most likely. So if you have any questions, let me know. And like I said, I will link the prompt in the description. Thank you so much again, and I will catch you in the next one.